Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. We've got a lot to talk about today. There's some breaking news that actually just broke about 30 minutes ago. It's bringing about a big move in the Chinese yuan renminbi. We're seeing a lot of action fly into precious metals right now. We talked a lot about being able to buy in gold and buy in at silver, and right now we're seeing an explosion in the silver prices of about 5%. This is a move that I've been expecting for quite some time. We're going to go ahead and show you the technicals on that. We're also going to recap the RBA's decision, sort of a surprise decision to hold interest rates static for the seventh consecutive meeting. We're also going to look at that Australian dollar, US dollar. And then as far as the US oil markets go, we need to take a look at oil. We need to take a look at consumer confidence, which came in dreadfully low today. And then also really a dynamic situation for later this week in our news cycle that we need to sort of get prepped and ready. Yesterday, we didn't really do much in the way of fundamentals because it was a slow news day. Today, we've got a big-time news day. We've got good market movements, and we've got a lot of trading to be had. So we're going to take a look at as many markets as we can, hit these key news events. If you have any questions at all, be sure to ask. We got the live chat going again, so that's functioning pretty well there on YouTube, Facebook, and also X. So do welcome everybody back to the room. Dibble, good to see you. I'm doing very well. I can't complain. Mark Corp, good to see you. All goods here. All good on my end. We got a big news story here. This one broke about, it's 8 hours ago, but it's really been grabbing a lot of traction recently in like the last 30 minutes or an hour. But you can see China unveils raft of measures to boost economy. And this was an absolutely staggering stimulus package that the People's Bank of China, the PBOC, announced. It really reminds me of the TARP stimulus that we saw from the United States back in 2007, 2008. And I have a hunch, I have a feeling that these interest rate cuts, the surprise cuts that we saw out of the Fed, have a little bit to do with this. I think that your global economy is starting to slow down and maybe sour just a little bit, and there's a lot of really going on here. So let me see. We just had a limit order execute. Let's go ahead and check it out. This is sort of a 5-minute gold chart. I'm very bullish gold. You can see we had a nice pullback there, but potentially an opportunity to get long here. We're just going to sort of wait and let this thing play out, but a little bit of selling pressure, and I wanted to dial the trading down to a real low time frame because this trend in gold has been absolutely textbook. I mean, there's your move from earlier this morning. There's a pullback. There's another move. There's a pullback. There's another move. And right here, we sort of decided to dive into this gold market to the long side using a 5-minute chart. And I'm going to go ahead and just let it spin. I don't think the top's in for gold. We could see a big correction here on a short time frame. But right now, everything is sort of complementing the long side of your metals market. We saw a huge stimulus come out of the People's Bank of China. Well, remember, China's been an absolute huge consumer of gold and silver. They have vending machines. I've never been to China, but I've seen the stories. I've seen the work, the reporting work where there's vending machines. I don't know if anybody's ever been there and actually bought a piece of silver out of a vending machine, but really the precious metals market has been, I would say, not necessarily over the top influence, but definitely consumption's been encouraged by your People's Bank of China, and a lot of the stimulus money you have to think is going to find its way into the metals markets, and that global devaluation of currencies, fiat currencies, which is exactly what stimulus does and what rate cuts does, really points to the top side of the gold market. So I'm going to let this one spin for a while. We'll see exactly how this thing develops. This was sort of a lower leverage trade, 5-minute chart. I'm not really too interested in taking huge positions based on a 5-minute chart, but I think that you already had a decent scalp there, but I'm looking for this maybe to get a nice entry point and maybe make a run at those new all-time highs, which is about $3 up there. It's an ambitious trade for using a 5-minute chart, but definitely is a pullback on a nice Fibonacci sequence that I would have a real hard time arguing with. That being said, anything can happen. 5-minute charts are much more risky than our dailies and our 4 hours, but we are just going to break down the metals markets for you today. And if, in fact, we get a chance to trade it, we're going to pull the trigger on it. So right there, low leverage trade on gold. We'll see how it goes. Martin, 174. Good to see you, Martin, over in YouTube. Fawaz and Abdullah, good to see everybody back in the room. Let's go ahead and get back to really get back to what we were just talking about before our little bell went off. You can see that we're talking about a major stimulus here, and we're also talking about a major reduction in interest rates. Further measures aimed to boost China's crisis-hit property market include cutting interest rates for existing mortgages and lowering minimum down payments on all types of homes to 15%. We're always curious about direct intervention in the real estate market. It suggests that we're in a very weak economic position because there isn't as much liquidity in that real estate market to keep keep it being what I would say, not necessarily a fair market, because I don't know that any market's fair, but an efficient market. Once the money leaves any market, it crashes. And right now, I feel like China is really on the verge of seeing a major real estate crash. We saw really the beginning of that start with that Evergrande crisis, and I'm watching this closely. I think that this is a major story, and it's one that's just now starting to get a little bit of puff on your global markets. So definitely want to check that out. One of the big things that I would say, one of the big beneficiaries of that story has been silver. Now, right here, you can see we're sort of still looking at this gold, a little bit of retracement here, but take a look at silver today. Silver, this is for the week. We're up about 2.86%. But for today, take a good look at what this spot silver market is. That is an absolutely explosion in prices. That's almost 4.25%. That's about as big as moves. That's about as big a move as you're going to get out of daily silver. And I want to buy pullbacks. That's what I'm interested in. I'm not really interested in selling silver. One level, though, that you do need to be aware of, and definitely always mark these things down. Always understand that markets have memories. Take a look at what we have right here. We sort of had those double dojis. That sort of suggests a reversal. That didn't happen here. The trend continuation is very strong, and right now we're bidding everything in sight for September. Well, take a look at what's coming up. Our high that we had back in May, I highlighted this level late last week. I think this one's going to come into play for silver. Yearly highs are right up there, right around 32.50-ish. It's going to be a little bit different depending on which brokerage firm that you're using. This is Awanda's number, so this is a very widespread common figure that a lot of people are basing their charts on. That high right there, 32.51. Probably very accurate to what you're going to see out of a spot silver market. I'm watching it closely. I think you could definitely get a little bit of compression there, but I'm watching those yearly highs, and if we do explode past that, I'm looking to buy pullbacks the entire way. So if in fact we are going to trade this today, once again, let's go down to our daily, and you'll see there's your daily. Huge breakout. I want to buy. There's no question about that. I want to buy, but can I buy with good trade location? Right now, I'm very much in danger of buying the top. Sort of looks like that's what happened to us in gold. We'll let that one play out. But I do really want to point out, a good Fibonacci sequence on a 4-hour chart. These were other swing highs. If you remember, we outlined the silver market for you late last week. And if you do take a good look at what's happening here, it's a nice big range. There's your 4-hour break, coincided with that news out of the PBOC, and also our consumer confidence, which is down big today. We're going to cover that. But there's a lot going on, guys. And right here, that is just an absolute flat line, and then a big sweep, a big break in silver. And that's a lot of folks got on the right side of that. A lot of folks didn't. So I hope that you guys were on the right side of that. But right now, what I want to see is a pullback down into this zone and give me an opportunity to buy it. I have much more confidence in a 4-hour chart than I do a 5-minute chart. Remember, the longer the duration, the better chance you have of getting a profitable trade. 5-minute charts and 1-minute charts are really tough to trade, but something like a 4-hour for a 24-hour market like silver is great. It's absolutely fantastic. So I did want to point this out. I think that we do have an opportunity potentially to trade this thing. We just got to see this price come down a little bit. And I would be a buyer down here, 31.50-ish. I would be a buyer there. I don't really want to sell. I don't want to commit and sell a bunch in front of those yearly highs either, but 32.50, maybe selling 32.40s, 32.45s, something like that could be a real tight, nice scalp for us in the silver market. But I would be very careful with what I'm doing up there, because this trend is up. And if you do see price break above yearly highs, odds are we're going much higher in the silver market. So something to think about there if you're interested in trading silver. It's a popular spot pair, not so much on the futures markets because it takes a tremendous amount of leverage. You got to have big margin money to trade silver, full-size silver. So if you're going to trade silver on the futures markets, be looking for a micro silver contract, something that doesn't require as much capital to trade. You definitely don't want to mess around with a trending market, especially one that's real expensive. That can wipe you out real quick. So we're watching for nice pullbacks. If we do get that in silver, we're going to have a chance to get in there and get involved with a little bit of meaning. And I think we will. This is sort of one that we pointed out yesterday. Pretty darn good trend line. When you start talking about what exactly trend line trading is, this was trend line trading. And we outlined this for you late last week. We talked about the trend line developing in that U.S. dollar, Canadian dollar, and something just like that was really a solid trend line. Remember, for a trend line, you only really need 2 price points to connect it. And in my view, this was almost a perfect setup to go short on a breakout beneath that zone. We put out a key levels video earlier. If you haven't seen it, be sure to check it out. It doesn't have very many views at all, but you definitely talks a lot about trend line trading and how to play a breakout beneath a support zone like this. Let me see. I got a question. Let's see. What pair is this? This is the U.S. dollar, Canadian dollar daily chart, and I'm going to jump around on the time frames here in a second, see if we can get something to trade. But right there, nice swing low. You could, sometimes a lot of traders will do this with their trend lines, and this is okay. Just make sure that you connect, say, to at least 2 price points, and it doesn't have to be absolutely perfect, but I do recommend being as concise and as precise as you possibly can be. So I would be looking at a trend line like this. That's how we had it drawn yesterday. Just a beautiful sell-off there, and then nice compression. Nice compression Friday, and then we got the big break. And right now the trend is on. If this uptrend, this daily uptrend is over, sort of a retracement into this broader trend, and now we're going to establish another leg lower. Couple of things I would be looking at if I'm going to trade this thing. If I'm going to get in here and trade this Canadian dollar, number one, I want to make sure that I recognize that swing low right there. That's absolutely huge. That low that we established on the 28th of August, 134.36. It looks like we're going to go there. So for me, I have no problem selling right now. The real question is picking out a time frame where we can get involved potentially with a little bit of good trade location. And right now we don't have it. So we got to wait for a swing low to set up before I can sell a pullback here. I'm not really sure that I want to buy down there either. This is a strong trend. I think that if we in fact missed that breakout beneath the trend line, we could just be sort of, well, I won't say SOL, but we may be out of luck. We may be out of luck for right now. Definitely keep an eye on that low right there. That's March's low as well. You've got a swing low right down there, December 23rd. Definitely keep a close eye on that. You want to always understand where your key levels are. Key levels, monthly lows, monthly highs, very important. Yearly lows, yearly highs, very important right there. That's January. That's January's low. And what do you got there? You got sort of a yearly low that probably will be a fantastic long trade. Your low down there is 132.28. I'll be looking a bid right above that. We're just a ways off, so I'm interested in selling right now. I would much rather get short. I don't want to be long right this minute. I want to wait. We got to see a little bit more extension, and then we'll talk about stepping up and buying this dollar CAD. But the reality is this: the Canadian dollar gets stronger when you get a rally in oil, and right now you've got a rally in oil of about a 1%, and I'm going to go ahead and show you exactly what level we should be looking at there in U.S. oil as topside resistance. Put a trade idea out earlier today, and I think it's going to be a pretty good one. We just got to see a little bit of follow through. So right now, I'm interested in selling the dollar CAD. I would dial this down to a 4-hour chart, and I would sort of wait for a swing low to set up. And then as far as my entry points, typically revolve around Fibonacci numbers, something like that. I would be looking for that pullback right to 38%. This is a strong downtrend. The reason why I say that is that trend line is broken. So keep a close eye on last month's low. And then for me, I would really be looking to strategize maybe a more leveraged buy from the yearly low. But I expect this market to break out beneath August's low and give us a bit more opportunity to trade this trend. We just have to be careful. So the dollar CAD, definitely on my radar today. Let me see, Gaming Chronicler. Let's see. Can you look at the U.S. dollar, Japanese yen into the golden zone? Yeah, sure. Why not? And then I see a number. I'm not really sure what that is. I have no idea what that is. So, but yeah, I can take a look at the U.S. dollar, Japanese yen. Actually, it's a pretty good one to look at here. And then we're going to dive into our our fundamentals for today. And we do have a few. As far as your golden zone, you can see it's performed very well. Let's go right down to what was it? Our weekly golden zone, I believe. Sure was. Love my weekly numbers. They're probably, you say, Shane, what time frame do you like the best? When my weekly numbers come into play, I know I have a very high probability of winning trades. Now, the only problem you run into with that is sometimes your risk is a little bit bigger, and a lot of times your numbers just don't come into play. This was a pretty good one. We talked a lot about this dollar-yen golden zone, and right there, 62%, we got that nice big rally. We came up and sort of failed there last week, but this has been a great short right up there from 144.30. You'll notice that our weekly high is 144.68, and right now we're printing 143.58, so that's a rock-solid trade, really a fantastic top-side level. What do you want to do with it? For me, I really wouldn't have any problem selling it again. You really have a double top setup here, maybe even a triple top or a quadruple top on the 4-hour. I would just say that that's a very effective resistance zone. It's withstood 1, 2, 3, 4, 5, 6 tries. I don't know that we get established above that. I think that you could probably sell that again, especially with no real market movers coming your way in the Japanese yen. If I was short, would I be holding my shorts? One of the things that I would be careful with is, you've already secured some decent money. Now, if you want to stay short here, you can. Just remember, that support zone right around 143.40-ish is a big deal. And look, at just as much as our topside resistance has kept a lid on this market, your downside support has really kept a bottom on this market. So do I see some compression developing here? Yeah, let's go down to a daily. I mean, this is compression, guys. Nice, big sort of a big retracement, and then we got the big sort of a crazy candle there on the BOJ, and then yesterday we traded real tight inside of Friday's range, and today what do we got? About a failed auction above yesterday's high, and then we're coming right back down into sort of a hammer formation. If I was holding shorts, I would feel pretty good about it. But remember, the key to this is going to be taking out that 50% zone. You can see that right now that support level is holding price in check. So be very careful. And as far as would I take a short right now, no. You don't have a good trade location. If you missed out on the back end of the golden zone short, that's sort of too bad. But for right this minute, if you wanted to sort of trade this chart pattern, this hammer, this inverted hammer formation, maybe tomorrow you could sell beneath today's low and try to get a big runner. Stop loss, though, is going to have to be above that high. That's a significant risk, so be very careful if you're going to risk that much money on one trade. I don't want to see anybody getting cleaned out just because the market sort of went against us. Let's go back and check on our short-term trade and see how it's gone. You can see we sort of came back. Once again, this is low leverage. The golden zone there and that 5-minute gold looks to be the ticket. Right now we're long from right up here, and we're going to need to see this gold make a new high to really deem this thing a success. But right now, I mean, we didn't take much of a draw, about what, a buck, $2, something like that, and now we're right back up to where we need to be. So this bullish trend is still very much in play. We just got to wait and see how it pans out. And once again, you'll notice used very low leverage on that. Why? Because it's a 5-minute chart. I don't lose the ranch on 5-minute charts. So let's see. I got another comment here. Victor, good to see you, Victor. I read in the Wall Street Journal that gold will increase its price after the rate cut due to the fact the U.S. dollar might lose its value compared to other currencies. Do you see any entry price to buy gold at the moment? No, we need to get a decent pullback. I'll be all over gold for the rest of the week, but we need to see a negative day in gold to give us a chance to step in and buy this thing with a little bit of confidence, because if we don't get that, what happens is a lot of times we wind up buying right at an all-time high, and even though the retracement isn't that big, it could still shake us out of a leverage position. So I would be very careful buying gold until we get a significant retracement, and I'm going to be basing my decisions there potentially on your weekly and your daily chart. Let me see right here, Matthew. Where would you set the stop loss? Well, for that 5-minute trade, this is always tough, because what inevitably happens on a 5-minute or a 1-minute chart is you run into choppy price action. Immediately, you've got a nice big move, and then we sort of get chop here, and then we get a break, and now we're sort of back to where we need to be, getting that rotation to the top side. There's a couple of different ways you can trade these things on short time frames. Now, realistically, the number one way that you could put a stop loss in and sort of try to give yourself the best chance to succeed with a trend following play like this is to put it beneath that swing low. That's probably the most honest. I call that honest trading. You're not trying to just nail it just right, nail the market timing just right. What you're trying to do is give yourself a chance for those bidders to come into play. That probably wouldn't be a bad idea. So in this case, it would be 146. It's that swing low. You'd be looking to pad this. Don't put it 1 or 2 pips beneath that zone. You probably have to pad it a few pips to sort of give yourself a little insulation. But if you're going to do that, type of trade, you've got about a $5 risk, something like that, a $6 risk. So you've got to get at least a 1-to-1 risk versus reward. So in that case, your profit target's probably going to be $5 up here, so 56, something like that. Now, I don't really have a problem with that. I think we get it. The real question is do I want to take that big of a risk based on a 5-minute chart? For me, it doesn't really ring my bell. I would much rather do a trade on a daily or a weekly or a monthly chart, use one of those macro levels and really load up the leverage on it. But if you want to trade short time frames, and I know a lot of you do, I get the question every day, hey, Shane, will this strategy work on a 15-minute? Or can I trade it on a 5-minute or a 10-minute or whatever? And I say, yeah, you can do all those things. Just make sure that you got some back testing. And for me, 5-minute trading, especially on spot gold, isn't that great because of the spreads involved. You could definitely do it on a futures contract and be just fine because there isn't really those spreads. But that's one way you could put your stop. The other way, you could play 38%. You could put your stop loss beneath the next Fibonacci number down there. You're going to get stopped out a lot doing that. Or you could maybe, if you're playing 38%, put it beneath the golden zone. That's just sort of playing it tighter. Or if you're playing the golden zone, they're buying the golden zone, you could put it right beneath your 78%. For me, probably the easiest thing to do is to place it beneath the entire wave as a whole, and then look to get those at least 1-to-1 risk versus rewards. That can be expensive though. In this case, it's very expensive. I do think we have decent trade location to the top side, just because we're in such a hot trend. I'd be surprised if we reverse and take that out. That being said, right now we're just right at scratch. We haven't made any money at all yet. So that's one way you can trade the place the stop losses, Matthew. That'll work. Let me see, Kalani, can you also look at the Great Britain pound Japanese yen, please? Yeah, we'll go ahead and look at the guppy here in a second. Any idea on the Swissy pairs, or rather wait till after the S&B? Yeah, we got to wait. We got to wait till after the S&B. But we'll go over both of those pairs here in just a second. All right, guys, if you need any market access, any way to trade things like gold, silver, dollar yen, guppy yen, whatever, take a look at Switch Markets. That's our partner broker here. Got all sorts of deals right now, 100% deposit bonus. This is a good look at our week. Really a busy week. Not nearly as busy as last week, but there still is some big-time market movers scheduled. The RBA and the CB Consumer Confidence Index is what we're going to look at today. Wednesday, new home sales. I don't expect much action off of that at all. Thursday, the S&B. That's going to send the Swissy pairs crazy. And then Friday's the PC Price Index. That's going to send the dollar crazy. So we got a lot. Late week trade. Thursday and Friday is going to be relatively big again. Right now, though, Tuesday, Wednesday, Thursday, psychology. I want to be aggressive. I want to trade my plan. My goal on that 72 hours, Tuesday, Wednesday, Thursday, we're going to take a good look at how exactly to trade our plan aggressively. If our strategy says trade it, then we trade it. That's all there is to it. And then also we're going to ride the momentum. Now is the time to make money. Always remember, this game's about momentum. Monday is for getting momentum going. Tuesday, Wednesday, Thursday is for piling on the leverage and making the money we need to make a living doing this. And then Friday is about preserving momentum going into the next week. Psychology is vitally important. If you're going to be a trader, you have to figure out how to make the psychology work for you. Let's see, right here, RBA interest rate decision. I expected more out of this. I mean, this was sort of a dud in my book. I was disappointed in the RBA. I thought they were going to do something. They didn't do anything. RBA stepped up, held interest rates static at 4.35%. That was the 7th consecutive meeting where they held the rates static right there. The RBA maintained its cash rate at 4.35% during its September meeting, keeping borrowing costs unchanged for the 7th consecutive month. Interesting. And you see right here, over the last 5 years, we were in COVID, we went to zero, and since then we've just been aggressively sort of raising those rates and holding firm above 4%. We haven't done much in quite some time, 7 consecutive months, something like that, meetings. Interesting stuff. So when I look at that, I say, okay, RBA, typically you're going to be looking at those Aussie pairs, and that's exactly what you're going to want to be looking to trade. Interesting though, very, very interesting here, because we saw interest rates sort of be held. They didn't cut. The United States is cutting interest rates. We're in a dovish policy. What do you got? You got 2023's high. You got a sort of a big breakout here over the last 2 months. So all of a sudden, the RBA is becoming one of the world's hawks, and that's driving your Australian dollar, U.S. dollar north. You can see right there, 2023's high is what I'm looking at here today. You'll notice that we broke above December 2023's high. We broke above this year's high. That's my next port of call. So I'm bullish. I think this Australian dollar breaks and tests that level. If in fact that's going to be the plan, I want to know exactly how to trade it, and my plan's relatively simple. Those of you that have watched any of these streams, Fibonacci retracement, spike low to a spike high. I want to buy this thing. I don't want to sell it. If I'm looking to buy 68.57, something like that. If I want to hold golden zone, maybe 68.41, maybe 68.50. I don't like 50% very much, but you can see this is a relatively tight sequence. 68.84 is the top, 68.14. So what is there, about 70 ticks in there, 70 pips? So these types of trades on this 4 hour would be looking for 25 pip, probably maximum payoff there. So we're definitely are watching this Aussie USD. I also want to take a quick look at this Aussie CAD. You can see right there, we sort of outlined what could be a relatively tough zone to get a trade across. I really outlined 2024's highs for this Aussie CAD and talked a lot about maybe selling right in front of that zone. If you don't remember any of that, go back, check out last week's streams. And what do you have here? You got sort of a bearish type of it's not a bearish market, but it's definitely a lid put on this market. And a lot of that has to do with WTI and U.S. oil rallying. And so remember, when the U.S. oil goes up, WTI crude oil goes up. What do you have? That Canadian dollar gains a little bit of strength against the majors, and that's sort of what you're seeing. We're not really getting the big reversal per se, but we do have a lid right on 2024's highs, 92.64, and that's sort of where we're at. We've seen a lot of compression here. Probably, what does this look like? Maybe a daily triple top for us. And that's exactly what we have. So do we want to buy or do we want to sell? Well, I mean, it's sort of tough. I would be looking to buy pullbacks, but we've got to get a good one first. Maybe something like this on the daily might give us an opportunity to bid once we get a sort of a retracement in WTI crude, something like that. I don't know. We're going to be waiting a while for that number, I think. Fairly bullish. Just that zone that we had outlined, relatively bearish right in here. There's a lot of sellers, so be careful if you're trading this Aussie CAD to the downside or the top side. It's in rotation. You could easily get chopped down south, or you could get chopped out trying to buy and play the big break. It's tricky. That's a tricky one right now. Let me see the meaning of the RBA, the Reserve Bank of Australia. That's the one that makes all the monetary policy decisions for the loonie. Let me see, Euro, Great Britain, pound. Yeah, we got a few markets we're going to look at here. I do want to talk consumer confidence real quick. This is sort of our fundamental of the day. Consumer confidence falls. This is big news earlier today. CB, the Conference Board Consumer Confidence, this was the lowest reading in quite some time. It came in at 98.7, and that is well beneath the previous release of 105.6 and 103.9. That sort of tells us that there may be trouble in paradise with regards to the U.S. economy. Really, the whole thing's based on consumer confidence, and you can see falls the most in 3 years. So that's sort of our opinions. It's the consumer, me, you, everybody that's a player in this market is really watching the economy saying, how do you feel about the future? I don't feel real good about it. Well, that was the consensus. We saw a major decline here. August, the biggest 1 month decline since August of 2021. That's COVID. That's back in that COVID era. We weren't really out of the woods yet, about a year removed from the COVID shutdown. So this was sort of a damning indictment of where consumer confidence is here in the United States. And if you look at these numbers, I mean, this is the consumer confidence fell in September, but right there from the Conference Board Consumer Confidence Index, what do you got? Really, a threshold, a reading below 80 usually signals a recession, so we're not quite there. But I will tell you this. It is a major, major decline. Right there is your chart, sort of going back to 2009. You saw confidence really get destroyed there. And we're watching closely. There's your COVID. We're watching our confidence numbers closely because they are not good. You're starting to get into that post-COVID era there where we saw a lot of money coming into the market to support your global economy. And this set of numbers is not real great. It is not real great. So a lot of folks are scared that maybe we are going into a recession. Well, maybe we are, maybe we aren't. We saw the big 0.5 point rate cut last week out of the Fed, sort of signaled to me that there's economic strife ahead. So if in fact we're looking at something like U.S. oil and you're talking about an economic contraction, you're talking about really demand drying up. Remember, recessions typically lead to lower oil prices. Not always. The 70s were certainly a different story, but recently, when you see oil prices go down, it's because demand is going to be sort of waning. And the reason why is because that economic machine, that growth, we're not getting the type of growth that we expected. That means that the demand for oil is down. Remember, energy is a number one catalyst for economic growth. So definitely understand that. Now, we are going into the fall months, which typically suggests you're going to see lower demand levels for your WTI crude oil. We outlined really what I'm very confident in, a great level up here at 62%, right around 72.87. I think that area being a potential sell during tomorrow's session could be an absolutely banger trade. So right now we've got a doji, a weekly doji setting up. I drew up exactly how to execute this trade idea, posted it earlier today. So check out our analysis thread. You can get in there and maybe get involved on one of these trades. If you agree, if you don't agree, then feel free to ignore it. But that's what I'm looking at here. I don't want to do anything else really with the U.S. oil right now. I'm not interested in bidding it a whole lot. We're going to talk more about the election later this week, but the election is your number one market driver for crude right now. And remember, when it looks like Harris is going to win, we see crude oil prices go up. And when it looks like Trump's going to win, we see them go down. Why? All about supply, and it's all about production. So definitely be there. That's the big number I'm looking at, though, 72.87 in U.S. oil. Also, if you're trading crude oil futures, very important to understand that we did roll towards the November contract. So that rollover is done. You're looking at crude oil futures. Pretty good volume numbers so far this week, but you definitely are starting to see the real question is that 3-week rally over? I don't know. As far as a 30-minute trade here, I'm on WTI crude. I'm not really interested in it today. Why? Very, 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 very tight. Very tight. So I'm watching sort of what I call a dead fish. Tomorrow will be better for WTI crude. We've got EIA inventories coming out. I'll recap all of that for you tomorrow. All right, we had a couple other requests here. We had the Swissy and also the Guppy. I'll tell you what, I've already got this dollar yen up there. Let's go ahead and we'll take a look at the Guppy. Then we'll take a look at the Euro Great Britain pound, and we'll close with the Swissy and sort of give you my opinions on that. As far as what we got going here on a daily, is this really a great market to be trading? Well, the Guppy's always got absolutely tremendous volatility and tremendous participation. So if, in fact, I'm looking at trading this one this week, your weekly chart right here gives you a pretty good idea of where resistance is going to be. Right there, we've seen sellers sort of dig in right in front of 194 thus far, 193.50-ish. I'm looking for a bit of a bullish break. I'm bullish this pair. We talked a lot about that because of the way the monthly's chart looks. But take a look at this, 197.36. That's a great area maybe to sell. If you wanted to sell 194, you probably could get away with it again. It's not my favorite area at all. As far as your monthly, I talked a lot about hammers and how much I love hammers. I love hammer formations. That area right there sort of signals that maybe, just maybe, this upward trajectory, this trend is going to keep going. So I'm not interested really in selling until we get a big move. Do I want to buy right now? I could build a case to buy. Let's go ahead and go to our daily chart and see what we're looking at here. Definitely could be looking at pullback buys. We could be looking at pullback buys and potentially getting long from this pound yen, something like that. 189.68, somewhere in that area. Yeah, I don't have any problem buying pullbacks. Just right now, price is sort of in no man's land. It's a ways away from any of our entry points, so it's going to be sort of tough for us to get a real clean entry on this one. So I'd be in a holding pattern. As far as if you wanted to be very aggressive, you could definitely do something like this. On a 4-hour chart, but I would really stay out of the 4 hours. I would wait for a bigger move. It's early in the week. We've got Wednesday, Thursday, great trading. We're going to have a chance to trade this Guppy. We're going to have a chance to trade this. I just want to see either that big retracement on the daily, nice big sell-off, and then we can get involved maybe towards the end of the week. But if we don't get that and we get that big rally, then we did have our level up there. We can sell. Interested in that. I think that it's definitely tradable. No doubt about it. We're on the move. As long as it moves, we can trade it. If it has a pulse, we can trade it. All right, let's see here. Euro Great Britain pound, and then we're going to go ahead and sort of I don't know. We're going to nail down those Swiss franc pairs. And that's going to be it for today. This right here is beautiful. I mean, it's a downtrend. Relatively easy to trade trends. At least the way that I look at them, it really is. It's relatively simple to trade a trend. All you're doing is looking to join prevailing price action, and the way that you do that is you just wait for a retracement and you sell it, especially on a downtrend, and you wait for a retracement and you buy it on an uptrend. So right here, 4-hour chart, I wouldn't adjust my time frame anymore. That's a good range right there. That's a nice big sell-off. The choice is yours. Your entry choice is yours. 83.43, probably 83.40s are a pretty good sell. 62%, 83.60. That's a pretty good sell. It's just all about your risk and what you want to assume. For me, I would probably rather go out on my shield than be too cautious here. Trending markets give us some great opportunities to trade, but if we in fact decide that it's a trend, we need to be aggressive with our entries. And right there, that's a beautiful L formation. Run, rotate. And in my view, selling from just beneath 38% is probably going to be a relatively sharp trade in the the Euro Great Britain pound. And that's something that very rarely trends. So that's a pretty darn good 4-hour trade. Let's see if there's anything we're missing here on a long-term level. And there really isn't. You're right there. Let me see August of 2022's lows. You could be looking at that spike low down there at 83.39. That's a key zone. This spike low right here in March of 2022, though, I would definitely be aware of that, especially if you're looking to maybe take a long in this market. Something like that's going to draw some bidders just because it's so obvious. So think about that. Something to think about. But right now, short-term trading, I would just stick with a 4-hour chart and look to dial in potentially a winning trade there maybe a little bit later this week. Martin, where would I place the stop loss on the 38% sell? Well, I mean, a couple of things you could do. I mean, if you wanted to assume a big risk, you could do something like this where you could sell 83.40s and put your stop loss above 83.87s. I'm not interested in that. If I was going to sell 38%, let's see, 83.43, one of the ways that I like to develop my stop losses is according to key numbers. And I'm really big on quarter handles. So there's a couple ways I could execute this trade. I always value my freedom when I'm executing trades. 83, let's say I want to sell 83.40s. A good stop loss for me would be right up above that 50 handle. That's a very, very tight stop loss. I'd be looking at like 83.59 as being a stop, and that gives me a chance at 16 pips on a 1-to-1 risk versus reward. I feel pretty good about that as being a real tight trade. Now, if I wanted to really stretch my legs out and say, okay, but I want to go for a little bit bigger money, I'm a big believer in at least 1-to-1 risk versus rewards. 83.43, my stop loss could definitely be up above this 3/4 handle, somewhere up around 75. You could do that. And if that's the case, what are you going to need? Probably 30 pips. So you're going to have to trade probably down in here somewhere to get paid off. Is that a good trade or isn't it? I probably would play this a lot tighter. I'd be looking for 15 to 20 pips. And if that's the case, you could just place it as a 1-to-1 risk versus reward, risk 20 to win 20. I like that chance, or I like that opportunity with the trend. I think you got a pretty good chance to win that trade, even if it's just a flat trend following 20 to win 20. Let me see. Victor, in your opinion, how correlated are silver and gold prices? The silver has a mind of its own. We use the silver gold or the gold silver ratio to really determine how valuable silver is, whether it's overbought or oversold compared to gold. But in my view, typically when you see a rally in one, you see a rally in the other. But gold definitely leads. Is definitely the sort of the cart before the horse, or excuse me, the horse before the cart. I think gold gets a lot more respect, but silver is definitely moves. Typically, when you see metals move higher, silver, if it takes a little break, it does make up that move, and that's what we saw yesterday. Silver was sort of down, and then we saw a big rally today in silver. So they're definitely correlated, but at least over the last several years, gold has moved a lot higher than silver has, and it's done it a lot faster. But this year, silver's definitely making ground on gold. So typically, you would say they were bullish, and there's a positive correlation, but you got to be really careful just buying silver as gold rises, because that relationship can be very choppy, and I'm not necessarily sure it can help you on an intraday basis. In any case, let's take a good look at our Swiss franc here. The SNB more than likely is going to cut interest rates. Remember, the SNB has a mind of its own. It will do whatever it wants. They're the cowboys of the Forex. They're the cowboys of the central bankers. They will do whatever they want. And if there's like a 1/4 point rate cut expected, don't be surprised if you see a 1/2 point or a 3/4 point. Believe me, the S&B, good luck predicting what they're going to do. They have a history of shaking up the markets at any given turn. So let's see right here. Spike low, that would be a huge level for me. I also pointed this trade out relatively well. I mean, I've pointed this thing out repeatedly, and that's 2024's low right down there at 84 even. We have been talking about buying 84s for a long time. You'll take a look at this month's low is down there about 83.73. That's not necessarily a bad zone to be buying in 84s, something like that. But what I would be watching relatively, what I am watching is 83.32, 83.25 down there. That's 2023's lows. Those multi-year lows are very important, and they do get bidders. So right there, we sort of put a proximity test in. I think a person could probably bid that 83.25, maybe 83.50, somewhere down in there, and bid that to the bull. As far as what I would be looking to focus on, I've been bearish towards this pair, and nothing's changed for me. Nothing's changed. I would be bidding this from the long-term numbers, but as far as a short-term read, I don't know that there's any reason to really reinvent the wheel. Remember, the S&B is going to be the major market maker. We sort of had this one. We've had this level outlined for several weeks. 38% worked like a charm. 1, 2, 3, 4. So I would be bearish underneath 85.15, 85.16. I would definitely be a bear. Just because the trend is definitely down. We're seeing some bidders step up at those long-term levels, but once those levels are gone, we could go very low. So for me, I would be looking to bid down here from 2023's low, maybe looking to get that 50 pip or 100 pip bounce. But this trend is still very much intact. If you wanted to sell a retracement, I understand completely. Those are trades that we've outlined in the past. The real question is, do we want to do that again? I'm going to leave that up to you. 85.15 will probably be the sell. Just remember, every time these areas, horizontal support and resistance levels get tested, they lose a little bit of their efficacy, and sooner or later, it's like somebody knocking on your door. Eventually, you do break out against that type of level. So resistance still valid for the dollar Swissy, still bearish here. But my mind, I have no problem trying to catch a falling knife around 2023's low. If I'm a scalper there, that's probably going to be a pretty good place to counter trend scalp. All right, everybody, I want to thank you. I want to thank everybody for joining me. I got a lot of questions today, so we did run long. Let's see right here. Daniel, consumer is tapped out. No more credit card limit. Well, that's exactly what the guys I was listening to this morning were saying, that the consumer levels of debt were unprecedented. Some of the bank debt, some of the like a Bank of America, for instance, they're holding toxic assets almost 7 or 8 times of what they were in 2008. Anybody that was there, I was doing business with Bank of America back then, and they cut everybody's credit line off immediately. They cut everybody's credit line off because they were in such trouble. I think that there's a lot of that happening right now, and I think that's a lot of the reason why you saw the rate cut come out of the Fed, and then you see the PBOC do what they did today. There are global liquidity concerns here. There's no two ways about it. And that sort of plays into my shorting, my idea to short U.S. equities as we roll into next year's trade, late this year, next year. Let me see, Adigun, how do I calculate pips? Check out our Academy. Go on over to How to Trade. Dial up a couple of our Academy videos. Start with Course 1 and just start working your way through them. And there's really a lot of content that gives you just the basics of your pips. But it's sort of a basic answer. How do I calculate pips? Google pip calculator, and you can just learn to use a pip calculator very, very quickly. All right, everybody, I want to thank you for joining me today. I ran about 10 minutes long, but that's okay. Remember, business has picked up. It's the time to trade Tuesday, Wednesday, Thursday. I think that we're going to be in even more business tomorrow and Thursday. I feel pretty good about the way this week's going. Sort of a slow start, but business is picking up, so it's time to trade. All right, everybody, I want to thank you for joining me. Any questions at all, reach out in the private chat. Be sure to swing by the How to Trade trading room if you haven't already done so and you're watching us on YouTube. Also, follow us on X, How to Trade on X. Be sure to give us a follow there, and you'll get all of our market updates as they happen. All right, everybody, thank you for joining me today. Mark Corp, always a pleasure. Mark Martin, always a pleasure, Martin. You guys have a fantastic trading day, and we'll see you back here tomorrow.